Isaac. I just wanted to make a quick little video for you about one of the trades I took this morning. I think it's the easiest one that you'd be able to recognize based on the education you've been learning with T trades and ICT. So this morning, starting out, this daily candle here was already above the previous day's high. And so since it's already above the previous day's high, I usually want to say, okay, what's going to happen next? Does it look like it's going to react in reverse from that previous day's high? Or does it look like it wants to continue? So this is let me backtrack. So this was at 9:15. So from the daily chart, I always go from the daily to the 1 hour. This 1 hour candle wasn't there yet. That's the close of the 9 o'clock candle. So this 15-minute price action was within that 9 o'clock candle. But the 9 o'clock candle is still going. It just hasn't closed. That's why it's up here at 9:15. This is the previous day's high. So at 9:30, we got a lot of displacement to the downside. And we have this candle closing below the 50% range of these fair value gaps. I don't want to get into too much mumbo jumbo for you, but essentially the gist of the trade was this 1 hour candle closed like this. Based on T-Trade's next day model that I sent you for intraday bias, I'm pretty sure I sent you that video. Where should this candle go to since it closed like this? Came above, it closed back in the range. We're going to expect it to take out this low, and we also have this fair value gap here. The fair value gap is from this candle's high to this candle's low. All of this space on this middle candle here in between this candle's low and that candle's high is a fair value gap. Those act as magnets for price to want to come back into. We don't know how far it wants to go into, but you can target the 50% or the fair value gap, or you can target just the high of the fair value gap here. In the trade I took, I wanted to see how it would react after we broke that 1 hour low and see if we could continue deeper, but it didn't look like it was going to continue deeper, so I closed the trade early. So we'll get into this. That's 9:30. So with this next day model, this is a 15-minute chart. If I'm playing the 1 hour time frame and expecting it to take this 1 hour low here, this is the 1 hour low from 9 o'clock here to 9:45. Then we closed. If I wanted to take this 1 hour low, I want price to come into some form of area of interest before going lower. So I want price to go higher before going lower. We have a 15-minute fair value gap here. So I would want price to come into my area of interest and then go down into the 1 hour chart or into the 1 hour fair value gap. So as you can see here, price, this is the 10 o'clock area. Price opened at 10, came into the fair value gap. As soon as price comes into that fair value gap, I'm looking for trades, and my entry is on the 1 minute chart in this scenario. So we're going to look at this. So we had the 10 o'clock open right here. This is the 10 a.m. open. This is the 1 hour low of the 9 o'clock candle. Here's 9:59. We have price coming to the fair value gap there. And this is called a change in the state of delivery, which is also an order block that forms. As soon as price closes below the last up close candle here, it doesn't have to close below. It just depends on your personality. But yeah, as soon as it closed below, you can either just enter so you don't miss it, or you can wait for it to come back into these up close candles here. So I entered somewhere around 22-point stop loss. I usually like to have around a 20-point stop loss. And then you can target that 1 hour low. It's a 73-point move. There you go. So essentially what you're always looking for is a bias. Our bias was to the downside, targeting this 1 hour area. Once we have our bias, we want price to come into an area of interest to rebound off of. This was our area of interest, the 15-minute fair value gap. Once we came into this fair value gap, I go to the 1 minute chart and look for a change in the state of delivery, which is where we have this down close candle here, take out the low of the last up close candle. Up here, we have another change in the state of delivery. Up close, down close. You have to use this though when you're in an area of interest. You can't just trade like that. You have to have an area of interest and then your entry model. So bias, area of interest, and then entry model. Hope that helps.